Hey everybody, Chris here with Tomorrow Mastery. It is December 2020, so we're doing our monthly check-in on the high yield dividend portfolio. We created this portfolio 1 month ago in November, where we put in $20,000, and on a weekly basis, I've been putting in $200 invested in the pie. So, and also, I didn't mention this last time, was that I'm also doing the same thing against the S&P 500 at 1% of what I'm doing with this portfolio, just for funsies to do a comparison. So as you can see here, on the M1 Finance, on the high yield dividend portfolio we have the $20,000 and then 200 per week. And on my Robinhood here, I've done the same thing, putting into ticker symbol VOO for the S&P 500 at $200 and then $2 every week. So how did we do? Well, not too bad. It has gone up. Well, if we take a look at the end of the month, November 30th, we ended our balance at 23,125, with the principal we put in at 20,800. Gives us about 11% return. Similarly, on the S&P 500, we also it came in around a little less than that. So we had a slight outperform on, here we go. So right now the market value is $230, where the cost was 208. Obviously, it's a very short time frame, so it doesn't really mean all that much. Just means that the stocks that I picked and its current performance did not change or vary too much from the S&P 500. All right, coming back here. Obviously, this is a dividend portfolio, so we want to take a look at our dividends. All right. So let's go to activities and take a peek. All right. So in November, we have made about $30, and on against a $20,000 account, it's not a lot of money. Yeah, that comes out to um, 0.15%. But if I were to leave that money in a high yield interest account in the bank, which right now is yielding about 0.6% per year, that $20,000 would have only made, let's see, about $10. So hey, $30 is a lot better than $10. And also, I know that a lot of these dividend paying companies will be paying out in December. So in the next month's checkup, we'll see. I'm expecting quite a bit bigger dividends overall. So what I wanted to mention on the M1 Finance platform is that if you see here, it says earned dividends 104.3 versus what we just saw, that we only got paid out about $30. And the difference is that if you're a dividend investor, you need to be aware of four important key dates. The first is the announcement date of the dividend. That's exactly what it sounds like. It is when the company announces what they're paying out and when they're paying out their next dividend, or if they're cutting it or increasing it, that would be announced on the announcement date. The next two dates are very closely related. It is the ex-dividend date and the record date, and they are 1 day apart. What these two dates mean is that the ex-dividend date, you need to own the stock the day before the ex-dividend date in order to be paid out the dividend that was announced on the announcement date. And the record date basically is the day after, and it is when the company goes through their records and checks who owned the stock the day prior to the ex-dividend date. So you need to be owning the stock prior to the market opening of the ex-dividend date, one day before, in order to get paid. And finally is the actual payment date, which can happen, a week or two, or even a little longer than that, after the ex-dividend date. So those are the 4 dates that you need to be aware of. So what this means on what we're looking at here is that the earned dividends, basically some of these stocks I've already been holding in the month of November, the ex-dividend date has already hit. However, the payment date has not happened yet, and that's why we see a difference. Personally, I think it's a little bit annoying. I would like to have a separate thing here for M1 Finance to display. Obviously, they're more of a general investment and not as dividend focused, and that's why it is just showing what we've earned. Or have now been entitled to. And what this also means is, if I were to sell off some of these stocks because I owned the stock during the ex-dividend date, I am entitled to the dividend distribution on the payment date, even if I've already sold it off before the payment date. So this is something that's important to note if you are, trading in and out of dividend stocks. You need to be aware of where the dividend dates are, and depending on how much the dividend is paying, it may, factor into your profit and losses on that. So it's looking good overall. Let's just flip through our holdings really quickly. And we can see, we'll just sort by the unrealized gains, which is the how much the stock price has moved. And as you can see, most of it has been, positive. On the downside, I don't see anything here that is really triggering to of concern. So we won't go into each of these stock analysis in this video, maybe in a future date. Comment below if that's something you're interested in watching. And okay, so nothing jumps out at me as that I want to change as far as the allocations of these stocks. So I want to talk about next is just some general news of what happened in November, and also why we see, if on this chart, there was a big jump up. There was a U.S. election at the beginning of November, where prior to the election date, the week before, the stock was lower than usual. It took a little dive. Some of this reasoning is because as the week before election, there's a lot of uncertainty, and that's one thing that the stock market really likes, is certainty. So historically, that's what usually happens, and I just happened to be lucky, or good timing, I guess, to create this portfolio right at the dip. And we could flip over here, and it'll be more obvious here with what the S&P 500 was doing. This is the week before the election, and as you can see, election was around here, and right after we got the election results, it kind of started going back up again. So that does account for some of the gains. in the market gains in this past month. So we'll see what happens next month. Now, another important thing that happened in November was that, as the Rona cases has been going up, but at the same time, there has been several vaccine announcements. I'm taking everything with a grain of salt. We'll see what happens. There may be more closures, which will affect the market negatively. But at the same time, there's talks of the new stimulus coming out. Well, I'll believe it when I see it. But obviously, a lot of these ups and downs, and overall, the market is just doing what it usually just does, which is climbing steadily over time, and that is how you should be investing. When these dips happen, you shouldn't really panic and be selling off your stocks or positions. You should just trust in the fact that the market will go up in the long term, and this is really what we're investing in the dividend portfolio for, the long term. So, another interesting thing that happened this month was with Pfizer. We'll take a look at the activity. There was a Pfizer had a merger and split off of the stock. Right here, there was a stock split. As you can see, because I had some holdings in Pfizer, I had some new shares added to my account, which I didn't really care for. So here we go. There we go. And this was the split off. It was a completely new stock, VTRS, that I just ended up selling off. Usually when this happens, you'll see a dip in the stock that had the split. So let's go quickly over to Pfizer. That's a way to get there. Pfizer, where are you? There we go. And as you can see, all right, we'll take the 1 month, and here it is. Here was the split off, and as you can see, there was a drop in the stock price of Pfizer. It wasn't very substantial. Nothing really to worry about. And again, I didn't really care for the other stocks, so as it was not what I did the analysis on. I just wanted to keep Pfizer. And so that's what happened with that. So that about wraps it up. Thanks for watching. Like, subscribe, smash the like button, and comment below of any information you'd like to see going forward, and I'll see you next time.